Hey everybody, this is Jose Blasco. We are about to get started. Please go ahead and let's have a quick hello message on the chat box. That serves as a sound check, so I know you hear me. Plus, it's nice to hear hello. So please go ahead and type a quick message on the chat box so that way we can start on time. Thank you so much, guys. I will turn on my video stream as well. Thank you so much, Mark. Good to see you. Good to see everybody. It's the top of the hour. I can see sound is good, so it's time to get started. So let's begin. Okay, I'm gonna highlight first the disclaimer on the upper left side of the screen. Please read it carefully. This is important information, as always. As you know, if you are a usual attendee of our trading sessions, so you know this, but please read it carefully. Do not skip it, even if you read it before. My name is Jose Blasco, October 14, 2021. This is Options with Options. We are ready to jump into the markets and see what the markets have to offer when it comes to options trading. So we'll be looking at those opportunities, and more specifically, more precisely, the agenda is: number one, look at the current market environment. Number two, trade review, look at the trades that we have running, trade management, and execution of new opportunities as we find them and they meet our roles. Very nice, very nice, very nice. I can see everybody's here. Nice. So let me take a look at, I'll bring in top with the S&P and we're going to start our analysis. Joe, how are you? Clive, how are you? Ahmed, good to see you. Christian, Maka, good to see you all, as well as on the other channels as well. It's good to see you, my friends. I am, as I said yesterday, I am delayed with the response of some of the emails, and also some of the emails are difficult to answer in a written form because a proper answer requires maybe a little bit of demonstration or something. So I have a few quick questions I would like to answer as we start, and this is for you, Joe. This has to do with your email from the other day. So one thing that you were talking about, I'm going to bring top for TradeStation. Okay, so this is top for TradeStation. You can see that on the upper part of the screen. It says Tradictive Options Planner for TradeStation. You have the option to place orders, access your account with TradeStation. So your question was about activation rules as well as splitting or shaving the spread. So let me answer this. So for example, here I got just a trade on the S&P, just buying a call. Could be that, or it could be something more complex. It doesn't matter. For example, a pull call spread. So if you right click on it to populate a trade ticket, you basically come to this particular screen. And as you are here, it's now time to place the order, right? It's now time to place the order. So the question is, can we set activation rules here? In TradeStation itself, it's available, but here, where are the activation rules, right? Well, the answer is that they are not here, okay? And I'm gonna elaborate on that more. Second question was, what about splitting or shaving the spread? The tools you have available to splitting the spread, once you select you want to do a limit order, for example, okay? And you're gonna type your limit price. So with TradeStation, you can select here split, shave, attach to the activation rules. So on top, you can either click the bid, click the ask. You also have the midpoint calculated for you. You can click the mid. And then if you want to do adjustments, you can do it here. Okay. And then place the order. But there is no split and there is no shave. Okay. And again, while we are always developing new functionality in the platform, and I'd love to introduce that in top as well for the ones of you using top for TradeStation. The reality, and I see there is an issue with my background, like it happened before. I'm not sure why this is happening, that my background looks weird. Sorry for that. I may end up, I'm tempted to disconnect the camera. You guys, let me know if my background is disturbing to you or it's okay. And if it's not looking good, then I'll just switch myself off. But anyway, what I was saying is that the way top connects with TradeStation to send those orders is via an API created by TradeStation. And unfortunately, that API does not have that functionality. And therefore, even if we were to develop that functionality on the platform, there is no way for us from top to send that to TradeStation. Okay. So in other words, as we speak at this moment in time, October 14, 2021, this functionality is not available and this functionality is not possible. So My recommendation in this case would be, because you can have TradeStation and top running at the same time, my recommendation would be, if you want to have a more complex order placement, go ahead and place your order on TradeStation. Then it will show here, okay, it will show on top, even though you would not be able to change activation rules and things like that, but it will show here. So at least you can monitor your orders and when you get filled and everything else. But when you want to do a complex order placement of that sort, unfortunately, the TradeStation API does not have data available for us to use and send that specific instruction from top to TradeStation. Okay, so unfortunately, yeah, it looks like it's raining. It's weird, isn't it? Unfortunately, Joe, I'm sorry to say that this is not something that we can fix anytime soon. Okay. And then concerning the zooming in and out that you were asking about, we got the plus sign, the minus sign. So we are or we have, I'm not sure, implementing some hotkeys and shortcuts and things like that. There are enhancements that will at some point release for the charting, such as drawing of the lines and other functions that are going to be just a bit more advanced and more friendly and so on. And hotkeys and things like that also are part of it. I'm not sure if that one has been implemented yet or not. I will need to reach to the development team and find out more about if this has been implemented and is ready to push in production or not. So if it is, I will respond to your email with specific instructions, and I will address that on the Sunday sessions, on the top sessions on Sundays. And if it's not, it's a matter of a bit of patience and waiting, because we will improve the charting capabilities. We've given less importance to the charting and more importance to the options tools as we launch top, and therefore there is room for improvement and works to be done on our end. Okay, but anyway, I believe this answers your questions, Joe, and thanks for that email, and sorry for being a bit delayed on those answers. I also owe Christian an email, and Mark as well. So bear with me, guys. If I'm not doing it between today and tomorrow, for sure over the weekend you'll get those answers. Okay. Good. Okay. So let's go for it. So analysis of the market. What do you guys think? 1.36% up the S&P today. What a move. Unbelievable. Impressive. We already got that on that day. Okay. That was a very, very impressive move. And that is another very impressive move. I would say even more impressive. So again, while it's impressive, to be honest, it's not surprising. We talked about it yesterday. We were hitting 2 out of 2 on the climate. So today the climate was supposed to start changing or change based on statistics, and it seems that this is what's happening. So if everything goes according to plan, meaning statistics, so we're gonna be in an up climate for 5 candles, and this will continue. Okay. Now yesterday there was this huge uncertainty on what is it that was going to happen. Today we cannot, act too fast. Okay, because the reality is that the day has not ended yet, and therefore, as you can see, we have this long gray line below the red dot, meaning that potentially we're gonna have a change of climate. Notice that every time there is a long line, from blue it goes to red, from red it goes to blue, from red it goes to blue, from blue it goes to red. So normally these long lines below lead to a change of climate, but that is only true the moment the candle closes. Okay, the candle is still trading today, and I don't know, maybe on the last 2 hours of the day the market is just going to sell off like crazy. We don't know. The reality is that, technically speaking, I would call that a sideways market. So we need to see a bit more confirmation. So I'm still in skeptical mode, believe it or not. While we have 1.34% move to the upside, I'm still a little bit skeptical. Why? Well, because again, what I just said, we don't have a blue dot yet. Number 2, notice the implied volatilities for calls and puts. They are basically equal. In other words, there is not a clear bias coming from the options arena. Even if we look at the options map, we got 1.3, 1.5, 1.1 more calls traded than puts. So it's not like this number is huge. It's not like it's like 3 times more calls traded than puts. From a volume average point of view, calls are above the average volume, but puts too. So again, it's not totally clear that the market is gonna continue. Okay, it's not totally clear. If it's a sideways market, it may rally just a few more bucks higher and then drops again all the way to 430. So we don't know what's gonna happen, and we need to wait for that confirmation before we get so much more aggressive directionally speaking. Okay, so on the weekly time frame, notice that as well, and that's the other reason why I'm in skeptical side. So if you notice at what the average is, the average is currently located at 440.62. The current price is 441. So we are now traveling and just crossing on the other side of the average. If tomorrow Friday on the closing we close above the average, then we're going to have a change of climate, which is expected because the down climates are to be 2 candles at a time, and we already got 2 weeks of down climate, so we should go back to blue, right? And if the weekly goes back to blue and the daily is going back to blue tomorrow, so then probably the continuation now is going to be quite solid, especially now we can see an Elliott wave turning point on the weekly. Again, that doesn't count until the candle closes, meaning tomorrow Friday. So we are at that stage where the market is about to define itself. Okay, how are you, Joanne? Good to see you. The market is about to define itself, but it has not defined itself yet. So therefore, my intention today from a trader point of view is exactly the same as yesterday. Get into non-directional strategies, get into directional strategies, always with a hedge, because anything could happen until we got a bit more odds in our favor from a directional point of view, which is likely going to be, we'll know the answer to that on Friday at the close. Okay, so a bit more patience there. In the meantime, quick look at the VIX as well. Of course, with a move, with the market going up 1 point something percent. And by the way, I'm using the TradeStation version of the platform. I'm going to switch to QC. And the reason why is because being in Asia, TradeStation doesn't have servers in Asia. And therefore, the data load is so much lower compared to QC, which utilizes AWS. And therefore, we got servers located worldwide to provide market data. So the data is faster. So what's happening to the VIX? Well, I guess it's pretty clear. Right? The VIX is trading at 17, so major drop. Okay, why? Well, the S&P is going higher, so the VIX it's going lower. It's a pretty normal behavior, and it's good to see. But at the same time, while the VIX is going lower, and again we can see that here when we look at the chart of the VIX trading at 14 today. So the reality is that calls and puts are basically trading at equal. Okay, so there is not a clear bias, even though the VIX is going down. It's happening to both the calls and the puts. Okay, so it's not clearly giving us anything too concrete from a directional point of view. Okay, so that's it. So conclusion: caution, skepticism. We're gonna keep doing what we do. That's the right thing to do, but without having too much of our portfolio devoted to either positive delta or negative delta. Talking about trade management, which is what I'm going to do that and review our portfolios and so on, I want you to notice how yesterday we had negative theta. So the portfolio was losing money, and notice how today the portfolio is making money on theta, while on top of that, the Vega the Vega exposure we had yesterday was, if I'm not mistaken, about 5. So now it's cut to half, 2.7. Okay, and that's because yesterday we entered this Aaron Condor with Royal Caribbean, and this added this positive theta. So again, for sure, you can always have as much positive theta as you want. That's always good to have. Positive theta is kind of like a sure thing. Is one of the very few things in trading which are a sure thing. But you gotta be careful with what you got on the left. In this case, our portfolio has a net 17 positive delta, meaning that the portfolio already have some component which is bullish, meaning that if the market continues going higher, the portfolio overall will make money because most of the stocks tend to follow the market, isn't it? So that's good. Having said that, some of the long positions we have, such as Intel, Colgate Palmolive, etc., those positions were entered a long time ago, and they didn't clearly work in our favor. They didn't clearly move in our direction, and therefore those positions are underwater, in this case by $79. This $46 is actually not correct, because I mean it's correct real time with what I have in the account, but if you recall, Intel is a trade that was built and then multiple tweaks were done. So this trade is actually positive, not negative. But for example, Pfizer is also showing minus 106. So meaning that we entered those trades too soon. So if I look at CL, for example, we entered these trades too soon. And while the stock is recovering, we got a lot of time of going against us. And therefore, we need to see that stock move higher, reach maybe 77, 78. And now we're going to start to see profits. But even if the market pushes another 5%, maybe we don't see profits on CL, Pfizer until, the stocks, move for a few more days. Why? Because again, we have absorbed all of these move against us. All of this implies times decay. So to offset that, we need the stock to move, by a certain amount to start seeing some green. So even though my portfolio already got some positive delta, I'm okay to get more positive delta. Okay, as long as I got some hedge against it. Okay, I'm okay to get some more positive delta. Okay, but not like every single long opportunity I'm just gonna take it, because remember, the S&P is still in that position where it needs to confirm itself. Again, Friday at the close, we're gonna have much more clarity at that moment. Okay. Maka, you did not get filled on Royal Caribbean. Got you. So okay, so hopefully today we'll have time to look for another Iron Condor. Mark, you did not get filled on Royal Caribbean either. Okay, got you. Okay, so indeed, now it's happening to two of you. So you are pushing me a bit more to start the day with more Iron Condors, because I was going to say that given the fact that I already got 16 delta positive, it's positive but not too much. So I want to add another long. Okay, but also I was going to say that I still have that 3 positive vega, and notice how Twitter, which is an Iron Condor, adds negative vega. Notice how Royal Caribbean, which is an Iron Condor, adds negative vega. So I was going to suggest to also add an Iron Condor, another one, to not only add more theta, which is always bonus, but also add negative vega to keep offsetting my vega from 3 to something lower. The closer to 0 the vega, the better. Okay, in general for the portfolio overall. Joe, spread was too wide in the end to get filled on Royal Caribbean. Got you. Okay. So we'll look for another Iron Condor. Okay, so we'll start with that in a moment. So let's review the trades speed of the light, because we did a lot of that yesterday. Intel, I'm just gonna skip it. There is nothing new to discuss. ADM, just for fun, naughty stock. Look at that, ABM up another 1.3% today. So again, that was a hedging trade that was going to make money for us if the stock was to fall. It didn't at all. So anyway, it expires on Friday, so that was going to expire anyway. So basically, this trade didn't really help, didn't really hurt, just a little bit. So that's it. So that will be gone next week. When we meet, ADM will not be in our portfolio, just like Intel. It won't be in our portfolios anymore because they expire on Friday. What else? Pfizer. Okay, so with Pfizer, let me adjust this to the midpoint. So Pfizer is showing a net result of minus 107. This is what it's showing at the moment. Again, if we look at Pfizer, okay, that stock, it's moving 1.2% up today, but we entered this trade when Pfizer was somewhere here. Okay, so from 44 all the way to 42, okay, that's like $2. Okay, the stock went against us by $2. Okay, so $2 out of 44, that is like 4.5% against us. Okay, so that's a pretty impressive move against us. And again, we've been tweaking this trade. I won't comment on it because we talked about it the other day, but we have been tweaking this trade. So worst case, this trade will have a much worse impact. And if the stock rallies, we are still going to make money. Okay, so we're going to let that trade play out. At this moment in time, of course, it's not looking good. But again, if the S&P goes back higher, remember, Pfizer belongs to a stock that belongs to a strong industry. So we are likely to see a very nice push, very nice surprise push. This is what normally happens when you enter a stock that belongs to a strong industry. There is a moment in time where that energy kicks in. And when that happens, you see these very nice moves. Just to recall a trade that we had in the past, that was a great example of this. You may remember a few months ago, a trade we had with Lilly. Okay, that was exactly the example. Okay, and again, we are well exposed to this possibility. So right now, minus 107. Not a problem. It's a matter of patience. And let's see if the push will take place. KBH, that one is a funny one. Just to use a little bit of humor, that's just like ADM. This is a hedging opportunity, and that's a weak stock that belongs to a weak sector. And notice how that stock is up by 2.3% today, which is even more than the S&P. So it's a rebel. It's moving all the way against. Okay, but again, I'm happy to have it in the account, even though it's a losing position at the moment, because the S&P has not defined itself again, as we said, and if the S&P was to continue falling, and not only continue falling, but continue falling like aggressively, like let's say the weekly climate extends for another 2 weeks or so this trade would end up paying and offset some of the losing trades that they have, like Pfizer, CL, and so on. So happy to have it, even though at the moment, given the sideways nature of the market, as I commented yesterday, we got many of those trades that are showing a negative P&L, not too problematic, but they are not showing green yet. Okay, so we need the market to be convinced of either moving up or moving down instead of moving sideways. Now, in the meantime, the sideways trades, okay, Twitter and Royal Caribbean are doing well. So Twitter is currently accumulating $31 of profitability. RCL, even though it seems that some of you have not got filled, if you were, you would be accumulating some profitability. So that's good to see. I'll check Twitter. Okay, and we can see how Twitter, if I move here, is basically trading right there in the middle of the purple area. So all of this is looking very nice for us to end up in the purple area on the expiration date. And if I look at Royal Caribbean, that stock is moving 0.37%, so it's not moving too much, meaning that we are in the purple area. And again, probability is same. That suggests that everything is going to be in the right place within that purple area. So far, nothing to be done, just to let time pass. Mark, what happens to the Intel legs that end up in the money? Okay, so let's go back to Intel to talk about this. Okay, this is a very good question. I didn't comment on it because I believe that it's all going to be automatically taken care of, but let's double check just in case I missed making an important comment here. So because sometimes it's so many trades that you assume or you get confused, one of the two. So let's go ahead and look at Intel. Okay, so what we have with Intel at this moment in time is a trade where there is a credit of 52 cents in this trade. If the stock was to end up trading where it is now, okay, even though the credit is 52, because the distance between strikes is 50 cents, which is $50, so you would end up breaking even. You would make $2 on the trade. Okay, so it's a break-even trade, which is what we commented on Intel. Okay, now if Intel was to rally, so you could make up to $50 per contract. Okay, but that means that Intel needs to rally between today and tomorrow to 57, which is not likely given the fact that the current price is 53.5. Okay, so that's very, very unlikely to happen. So basically, this trade is likely going to expire as a break-even. Okay, now do you need to do something about it? No. Why? Because this trade is made of buying the 57.5 call and then selling the 57 call and selling the 57 put and buying the 56.5 put. In other words, it's an iron butterfly. And of course, the time where you need to do something is if the price of Intel ends up trading anywhere between 56.5 and 57, or anywhere in between 57 and 57.5. Then you need to do something, because then you would either get a sign on the call or the put, but you would not get auto exercise on the call or the put. So then you would be either long shares or short shares as that option expires. But the thing is that stock is currently trading at 53.52, which is way below 56.5. And therefore, if that's the case, well, the calls will expire worthless. Okay, both of them. They are both out of the money. Now, the puts, they will be all in the money. And what does that tell you? It tells you that the 57 put will get you long 100 shares, and the 56.5 put will get you auto exercise and therefore sell those shares. So you will be out of the position for a $50 loss against the $52 credit you collected, and therefore you will end up with a $2 profit without doing nothing, without spending a dollar in commissions. So you just leave it alone. By the way, let me rephrase that: without spending a dollar in commissions, depending on your broker. Okay, TradeStation charges $14.95 per leg for every option that get either auto exercise or assign. So if you are using TradeStation, make sure you close it and you get out. Don't go through exercise, because closing a trade and paying a commission is way cheaper than 14.99, 14.95. I believe that's the standard commission. Okay. Now with many other brokers, I would say with the majority, TOS, IB, etc., exercise, I should say auto exercise and assignment is free of cost. Okay, so they will charge you exchange fees for the shares put to you or called away from you. So you may pay, I don't know, 1 cent every, or 5 cents every 100 shares, which is nothing. But with other brokers, again, TradeStation will charge you $14.95. So careful with that, because in this case, you're going to have two legs that are impacted by this. The puts, one will be assign, and the other one will be auto exercise, getting you out of the trade. Okay, and no cost with most brokers, but not with all. So make sure you know about your commission schedule. Okay, cool. Okay, so I believe this answers everything we needed to discuss when it comes to positions that we have, and now it's time to look for trades. So let's go ahead and look for our matrix. Now, of course, today finding trades is going to be tougher than yesterday, especially for the iron condors, which I'm going to start with. Anyone would like to tell me why is it going to be tougher to find iron condors today than yesterday? Anyone knows why? Thank you, Mark. Of course, these are very good questions to ask. It's key to manage the risk, isn't it? So it's important to know. So why is it? Come on, you guys. I know there is always a little bit of video lag and so on. Exactly, Maka. Exactly, Joe. The VIX has been lower. Exactly, Mark. Very good, very good. And therefore, premium is less, right? Now, we are looking for those weird cases where some stock, for whatever reason, has that huge expectations and the options are very high price. So we're going to start with our option scan, looking at the 80%, right? Mean greater than 80%. We're going to start with that, and it's giving us multiple symbols. Okay, so I'm going to try to be pragmatic just to save ourselves a little bit of time. EA didn't work yesterday. FFIV was not looking too good from a liquidity standpoint yesterday. Wait a minute, I did not load my list. Oh yes, I have it here. Great, perfect. Yes, so all good. Texas Instruments, that's a stock that we did not check yesterday, so that's the one I'm going to check now and see if that one works. The other two, you could certainly recheck, and maybe today is a different condition and it works, but again, I'm going to try to be pragmatic and be as efficient as possible, okay? And therefore, I'm going to skip that, okay? So Texas Instrument report earnings on October 26th. Therefore, there is only one expiration day we can use to do this trade, which is October 22nd. So let's do it like we did yesterday. I'm going to look for the spread select, float it, maximize it, type TXN, Texas Instruments, select the type of spread I want to build. Oh, just one second. Am I using the TradeStation version or am I using the other version? You see the TradeStation version is still loading. Being in Asia, sometimes I have problems with the TradeStation version because of the location of the servers not being local. Okay, so it seems that I'm having a little problem here. Okay, it does seem I'm having a little problem, guys. So sorry for this. Okay, give me 1 second. And I will get back to where we need to be. So I'm running so many things on my computer, guys. And the streaming it's often problematic. We're streaming to 7 places at the same time. So it does indeed require CPU power, okay? But anyway, so we are looking at Texas instrument right here. Here we go. And I was going to do the spread. Here we go. So here is Texas instrument. We're gonna float, maximize it. We're gonna uncheck all of these, select short Iron Condor. Here we go. And we said maximum we can go out to October 22nd, 8 days from now, because earnings are happening right after. So we cannot use October 29. Not sure why I said August. 190 is the other money strike. The minimum we have there is 2.5 when it comes to strike price increment. So we're going to go for that. This is close to a $200 stock. So I'm going to open the door to up to $10 wide range between the 2.5 to 10. And I'm going to load my template for Iron Condors. Okay, and click OK. And with that in place, I am now going to create 99. Use the filter, and I'm just going to sort. And we got 3 that pass. Okay, now the 3 that pass got these particular ranges. Okay, so let's find out what the chart is telling us when it comes to the ranges that we should have. On October 22nd, we're talking about 200 to 182. Okay, so 200 to 182. So the 200 is clearly met here, but the 182 is not met. We got 184, even though here we got 182. So interesting. Let me see. So 200, 182. Yeah, it seems, I would guess, okay? I would guess that if I take this trade, right, which is giving a break-even point of 195, which is not good enough, we need 200, but below is 181, which is good enough. If I was to take this trade and I was to move my higher strikes higher, so the 195, I make it 197, and then the 197, I make it 200. If I was to do that, I'm still not meeting my 200. Yeah. So yeah, it's not working. And if I do it again, if I do 200, I'm just doing this for you guys to see how the spread select is going to be helpful. So if we do that, so now I got 200 to 182, and that's good. But what's the problem now? The problem is that this condor pays only 11 cents, okay, which 11 cents, okay, if you look at my requirements with the parameters, I'm looking for a return on investment of minimum 25%, okay? And of course, if the risk of this trade is $2.5, right? And I'm just making 11 cents out of $2.5, okay? So this is actually a 4.4% return on investment trade, which is much less than 25, and that's why it's not highlighted. Okay, so again, that's why the filter is saving you a lot of time. So I'm just doing this exercise just for you to see that in order to save time in putting your trades together, let's not make it complicated. Just focus on either you pass or you fail, unless you want to use other parameters. You know, those are my preferred parameters. You know, for sure you could use different parameters. That's gonna be your trading plan. But you know, sometimes, you know, if you were to overlay too much options knowledge on top of the filter, then basically you're wasting your time because the platform is already doing it for you, and that pass or fail is going to basically be the answer. Okay, so just keep that in mind. Okay, again, and I'm not surprised this is happening because again the VIX going down, so it's probably limiting the amount of premium available. Okay, so let's do it again. Oh, I just got the wrong window here, so let me, where's the matrix here? So I'm going to float it. Oh, okay, got it. Okay, let me redo this quick. So greater than 80, no group rotation. Scan list, give me my list. Penny increment options, daily and weekly strength neutral, earnings 10 days at least, and no auto climate on this one. Okay, so the next one was Yum. So let's take a look at this one and see if this one is going to work. And again, with Yum, we're looking at earnings to be reported on 10/28. So same applies, maximum 10/22. So let's go for the spread select. We're going to do YUM, hit load. Let me assess what we got. So I got October 22nd. That's the only one I'm going to use. This is a $125 stock, so I'm going to go from minimum 1, that's great, and maximum I'm going to be okay up to 5, but no more than that. And then we're going to build 99 of those. The filter is already set. You can see it because you can read iron condor preferred parameters, so that means the filter is being applied. And then I'm just going to go ahead and sort it. Okay, and we got plenty of passes here. So the question is, okay, so how large we need the range to be? So I am positioning my cursor to the date 22nd of October, and then the line which is, you know, the furthest away is the red one, and we can see. So we are looking at 130 and 120. Okay, so easy to remember, 130, 120. So we got, oh, wait a minute. Here we go. So we got 135, 125. That looks good, but careful. I see missing quotes here on the left. Okay, so I am sensing that we're going to be in trouble based on liquidity. And this one could be okay, but then the range is not good. We need 130, 120. This could be good, but it's 127, 122. We need 130, 120, and below that it fails. So yeah, no good liquidity with Yum. Okay, so we don't waste time. We just continue. And now we're going to move to looking for expensive options using method number 2 instead of using greater than 80. We're going to look at mean minus historic above 2 standard deviations. And when we do that, we got ANF. I believe we checked ANF yesterday, so I'm not positive it's going to work too well. But anyway, we can give it a try because we don't have too much to choose from, actually. So here's ANF, earnings on 11/23. So 11/19 is the maximum. So let's do that. So we got ANF. We're going to be looking at 11/19 maximum. So I'm check marking all those dates. This is a $37 stock, so I'm going to go from 1 to 2. Maybe I'll do 1 to 3 just to have a few more options, but that's it. I wouldn't want to have that much risk on a $30 stock, okay? Even though sometimes you have these amazing spreads, amazing premiums, but it's quite rare to find, okay? So 99 combinations, let's go for it. Let's sort, okay? And first impression is bad, plenty of missing quotes. Some may be okay. Some may be okay. So let's take a look at October 29. Notice that we don't have anything with October 22, so 29 is the minimum. And the first other white line is the dark blue, which the dark blue is 42.7 to 32.5. So do we have 40 to 7? 40 to 7. We don't. 40 to 7, but that's November 19. Okay, so I would say it's looking like exactly how it looked like yesterday. So I do not want to waste more time with ANF. Therefore, I'm going to go back to the matrix and look at technique number 3 when it comes to looking for premium, which is to look at the greatest increase, okay, greatest increase of CIV mean in the last 5 days. Okay, these normally will bring in, I was going to say, a longer list. You are not guaranteed the level of premium is that amazing, but again, it's indeed worth it to check, okay? Because you have plenty of premium coming in at this moment, okay? So TWLO, Twilio, I mean, you can see the premium going higher, right? So when you do this kind of scanning, you are basically, you know, guaranteed that you are selling okay premium. Now, okay premium may not be enough to justify the range you need to accomplish, but at least, you know, by filtering this way, you know you are not selling cheap premium, okay? So that method number 3 is valid, even though it's maybe less powerful than method number 1 and number 2. It's indeed valid, and many times we find valid trades this way, okay? So Twilio, we're gonna look at this. So earning happening right there, so we need to use October 22nd. So let's go for it. So Twilio, October 22nd. This is a $300+ stock, so the minimum seems to be 2.5. I'm okay to go up to 10, and we're gonna build 99. And let's see if this fails or passes. So there are a few that pass. So because they pass, so now we're gonna worry about what's the range. Okay, and the range, the red line is the one above and below, the furthest away. So we are looking at 392 and 327. So 392, 392, we got there at 481. That's impressive. Yeah, but we got, yeah, lack of liquidity, 1.5 to 2. So that's totally distorted. Yeah, it's not looking good, guys. It's not looking good. Okay, so next one in line. Next one in line, we looked at EA yesterday. What about GameStop? Okay, so we're gonna look at GameStop. So what's happening with that stock? Earnings happening a long time from now on December. So we can actually use November 26th. So we have many dates there that we can use. Okay, many dates that we can use. So let's give it a try with GameStop. So we're gonna be looking at all the way to November 26th. Let's see what's possible. I mean, good news now is that there are many expiration dates. Also, typically, the implied volatility, it's a bit more in the shorter expiration dates, typically, not always. If I show you, take a look at this. Okay, I'm just gonna activate one strike only, okay? So the add money strike. And I'm just gonna turn on different colors for different dates. Okay, so notice what's happening. Okay, the gray, which is October 15, okay, that one got you know, plenty of implied volatility, 100. The next one in line is the orange, which is December, which is where the earnings are taking place. Okay, and then going down, you can see the red is October 22nd, got more implied volatility. The next one is November 5, more implied volatility, is the next one in line. And then the other ones are about the same. So you can see that as a rule of thumb, not always like that for every stock and for every expiration date, but as a rule of thumb, the closer the expiration date, typically you get more of a kick on implied volatility. So when you see a stock like that, where earnings are going to happen so far out, so in one hand, you have many expiration dates for you to give it a try, but at the same time, you kind of guess or anticipate that some of those expiration dates may not work too well because now the range is becoming wider and the implied volatility is less. And therefore, it may not work. So if you are kind of like rushing into putting trades together, let's say you have limited time, and you just want to be very efficient. So, you know, you can try to do the Iron Condor using those initial expiration dates. And if it doesn't work with, let's say, 2 or 3 at the beginning, then typically you would assume that the ones after are not going to work too well either, because typically further out you have less implied volatility built in. Okay. Now again, it's not always the case, and it doesn't take too much time to do it. But just in case you are really rushing one day, I mean, when I say rushing, you should never rush when you trade. But again, let's say you have limited time. Maybe you trade during the lunchtime and you have 1 hour. So just giving you little tips there of things that you will see. Christian, so Jose, you are not discriminating between the red and the blue lines to determine the range. No, I'm just looking at whichever is the widest, because those are four different opinions, okay? Four different opinions. The three blue opinions are opinions of what the statistical range may be if the stock continues behaving the way the stock has behaved, right? That's historical volatility, 1 month, 2 months, 3 months. But the red line has nothing to do with what the stock has done before. The red line is implied volatility that represents what the options prices suggest options traders believe is going to happen in the future. So then you have four different opinions. Three opinions based on what the stock has done before, and one opinion based on what the options traders believe the stock will do when it comes to speed of movement. So I don't care if the red is above the blue or below the blue or in the middle of the blues. Whatever is the further out, above and below, those are going to be my choices, which most of the cases is going to be the red, because we are using the matrix to filter for expensive options. So typically the red will be beyond the blues, but not always, because maybe the stock has just got a crazy gap 3 days ago, and then the historic volatility is very, very, very big. Okay, good. So let's continue, guys. So GME. So we said we're going to use all the way to November 26, even though those further out expiration days may be a bit disappointing. We are, this is a $186 stock. Minimum range is 2.5. I'm going to go all the way to 10. Okay, I'm okay with 10. And time to build 99. So let's build 99 and let's see what passes. And as we know what passes, then we will be able to go back to the charts. So using October 22nd, we got passes. Okay, so let's go back to the chart and look at October 22nd. So the widest lines are the red. So 213, 159. Do we have that? 213, 213. We don't. Everything is under 213. 213, 213, 213, 212 almost. 215. We got 215 there. Oh, it fails. Yeah. I'm just looking to 17, and that's October 29. Okay, that's October 29. So October 22nd does not work. So we're gonna check October 29, and we are rebuilding 99 spreads with October 29. And we're going to be resorting these and see what we've got. Okay, so October 29, let's take a look at the chart. So I'm looking at October 29, the range would be 222 to 149. So let's look for the 222s, 220, 216, 220, no 220, we're already looking at November 5, okay? Now November 5 may work. Okay, based on what we saw earlier on the skew, at least the at-the-money strike on November 5 got more premium than the October 29. So let's see if November 5 is going to provide the premium that we need. Let's try. So sorting. Okay. Okay, so November 5. Right here. Cool. So we are talking about 229, 142. Okay, so 230. We're looking for 230, 230. It doesn't look like it. 237, 232. Okay, that's good. So 232, and that's still November 5. So 232, and I said the other one was what? 232 and 142. Oh, that's 152, so that's not good. Okay, let's keep scrolling down to see if we get it. 246, 150, 232, 157. No, it doesn't look like it. and now we are hitting November 12th. So yeah, so we don't have it, guys. It seems that again, the fact that the VIX is down, it's a little bit of killing us today. Even with, you know, that stock got 81% implied volatility. Okay, so that's not a joke. And we are not finding a premium. Of course, if you got 81% probability, that is also calculated to calculate the statistical range. So then the range is very wide. Okay. But yeah, so that one is not working. So let's continue for the next one. Twitter, we already have a trade. EA, we looked at it yesterday. Siena Corporation. So let's take a look at this one. Siena Corporation. Okay, so earnings are when? All the way there. All the way there. So let me try to save a little bit of time here. So I'm going to float this. Again, we're going to look at a few strikes. Okay, I just want to see which one has the greater implied volatility. And of course, the orange, which is December because of the earnings. And then we got this one, which is next Friday, it doesn't count. And then we got October 29, and then we got October 22nd. Okay, so 29 and 22nd, that's what I'm going to try. Everything else is lower. So to save myself time, I'm just going to try 29 and 22nd, even though I can go all the way to November. But you saw what just happened before. So that's why I was sharing this with you guys. So you can save a little bit of time. Okay, so October 22nd and 29, this is what I'm going to try with Siena Corporation. Instead of all the dates, because in the end, it's often a waste of time. $53 stock, so I'm going to go from 1 to 3. And let's build 99. And let's sort. So we can see what happens. And I see a lot of missing quotes. I'm a bit surprised about that. I've traded these options before, and it was not too bad. Yeah, in any case, it doesn't look good. It doesn't look good. Many missing quotes and huge, very widespread. So forget about it. BBY. So let's see with BBY. November 23 is the earnings date. So I'm going to do the same thing. So this is BBY. So November 26 is where the earnings are. So that's why it's up there. October 15 is next Friday, doesn't count. December doesn't help. And then we got the red and the blue, which is October 22nd and October 29. Okay, so same story. With BBBY, we're going to look at October 22nd and October 29. I got it. It's a 100 plus dollar stock. So I'm going to go from 1 to 5. I'm going to build 99 spreads. Okay. We're basically, it's almost like when we do this research process, it's almost like we are looking for an arbitrage opportunity. That's not properly said because an iron condor has risk. It's not arbitrage. But it's almost like we are trying to find the best, the hidden gem somewhere. That's kind of like what we're doing. And of course, it takes a little bit of time in front of the screen, clicking here and there to find that. But then it obviously helps those trades, okay? So anyway, so October 29 is what I got. October 22nd doesn't give good results. So based on the filter, so let's take a look at October 29 range, which is right here. Notice in this case, the blue, okay, the blue is the one we care about, not the red. So that is 121 and 103, okay? So we are looking at 121. So 121, there is nothing, and below it fails, okay? So not good enough. General Electric earnings on the 26th. That only gives you one choice, which is the 22nd. So that one, let's do it. That one is going to be a quick one. Okay, so we'll do 1 to 5. 99. and we got a few that pass. So that's October 22nd. So let's take a look at what the statistical range is with October 22nd for GE. The red line is the one which is further away, and we're looking at 109 and 96. Okay, 109 and 96. So 109, we don't have it. It goes as high as 106. Okay, so hey, doesn't work. So next one, it's looking like we are getting no's everywhere. So we got Roku, Baxter, and Nike. So we're gonna do those 3 more cases, and then we'll know. Earnings on November 4. So let me take a look at premiums. So November 4, November 5, you can see is here on the top. That's where the earnings are. Then we got next Friday. Actually, it would be better for me to uncheck this one. We're not going to use it anyway. Then we got November 12. That's after earnings, so doesn't count. And then the one with more premium, November 19, doesn't help. And then we got 29 and 22nd. And it seems that 29 got more premium. So I'm just going to be pragmatic. I'm just going to go for the 29. Okay, 29. This is a $300+ stock, minimum 2.5. We're going to do maximum 10. We're going to build 99 of those. Okay, and sort it. Well, after today and yesterday, I think that you guys now know how to do iron condors by heart, isn't it? So October 29. So what's the statistical range for that? So this is October 29. You can see how the red color is above. So we are looking at 371 and 289. So 371, do we have that? 371, 371, 371, 371, 366, 362, 367, 362, 366, 381. Okay, 381 right there. Okay, so let me pause for a moment. Let's go back to the chart so I make no mistake. So we said 371 and 289. Okay, so this is good. Now 289, that's not good. This is 300. I need 289. Okay, this drops to 218, 217, and it fails. Okay, so this is where the fail begins. So yeah, so it's not giving us the statistical range. Okay, so guys, the VIX is killing us today. This is where, in trading, timing is everything, right? Joanne, you wish, but you will review more. I get you. I understand. It's all about repetition. Trading is all about timing, like life, like everything in business, right? And yesterday was the day to do iron condors where volatility was higher. But anyway, it doesn't matter. It doesn't mean that this is a bad thing, because believe me, volatility will go back higher. Is that making sense? So it's not like it's going to stay like that forever, right? So there will be days where volatility rises, just like there are days where the stock rises or drop, or same with volatility. So we just need to be adaptable. So Baxter, okay, with Baxter, we are looking at October 28. So that only gives me one choice, which is October 22nd. So let's do it. So October 22nd. We're gonna go from 1 to 3. We're gonna build 99, and then we're gonna sort it. Okay, and this is giving us a few choices. So let's see if those choices are gonna be satisfactory or not using October 22nd. The red line is the one beyond everything. So that's 83 and 75. So 83 and 75. Wow. Am I looking at the right chart? This looks too good to be true. So Baxter, 10/22, 83 and 75. Okay. And then here, okay, yeah, I understand why it looks too good to be true, because there are many missing quotes and this is totally unrealistic. Okay, yeah, so I'm like, that's not possible. Nike, last one. Oh, look at that, Murphy's Law. I was going to click Nike and it's gone, meaning that it's not meeting the rules anymore. So I guess volatility has been dropping we're looking at the top increase of volatility. See, volatility has been dropping during today. It may not meet that criteria anymore. It just happened. Okay, so hey guys, no trade today, which, as you know, doesn't make me happy, because I just like to put stuff in the account so we can manage it together and discuss it. But at least, when it comes to putting together the process of Aaron Condors, since we've done it a few times, as you can see, little by little, I try to add more stuff to make your life easier while make our options trading more advanced. So today, the one thing I introduce you to is the options queue tool, which, as you saw, I linked using the all groups, meaning that whatever I click on my charts, on the matrix, or anywhere else, it's gonna push the symbol into the options queue window. And then I had activated one strike, so I was looking at the add the money only. You could certainly add more if you want, but again, no need to make it too complicated, because now you can see how it gets, right? So I was looking at one strike only, which is the add the money, which is the most liquid one and somehow very representative. And I was looking at multiple colors, which represent multiple dates, to get to see which option has the greatest amount of implied volatility built in. And with that, then instead of going for all the expiration dates available to do my condors from now until earnings, I was basically shooting for the ones that are on the higher portion of this graph, of course, avoiding the tomorrow expiration, which is October 15 in this case, and also avoiding the ones which are lining up with earnings or after. Okay, but that normally in a market, in a day where the VIX is not dropping so much, that normally gives you a little bit of an edge to save time and just go for the expiration dates with where the greatest juice is there, right? And so that's a nice visual that I don't think I have used before in the sessions, and I felt it was a good idea to add this for you guys. Anyway, so top of the hour, and therefore we're gonna conclude our session here. I want to say one thing before we go, so please bear with me one sec. I'm just opening a web tab on my other computer screen. Okay, and just one second, guys. Okay, so I am bringing a web page which is on our site, and I would like to make you aware this web page exists, and I would like to ask you to start using it. Okay, so this web page is tradewithufos.com/Jose. And by the way, you're gonna have the same one with all your instructors. Okay, so if you are doing a session with Becky, it's gonna be /Becky. If you are doing it with Boyan, it's gonna be /Boyan. So whatever whichever instructor you are attending at the moment, you can use their page. Okay. Now, why is this interesting? Let me log in this page. Okay. Just one second now. So I want to load, for example, the one with Becky, just to pick one of the instructors. So you guys also get to see that with those pages, you can also, if you want to book time one-on-one, we also do one-on-one coaching, as you may know from the website. So you can have direct links there from every one of those pages. Okay, so tradewithufos.com/Jose/Becky, etc. So that could help you. Okay. Now, why am I pointing at this? Well, because in the bottom part, okay, all those pages, okay, have give you the opportunity to log in. Okay, and all of you have a login in the website. You are watching the session now as you are logged in. So you can log in, and the moment you log in, this is going to bring you to a tool that we have implemented on the website for you to be able to ask questions to the community, but also get answers that may be already there waiting for you. So notice how, this is kind of like in an early stage. It's not like we have too many questions here already, but there are some questions already. So let's say that, for example, you have questions about how to use AutoClimate. So you may come in here and click on type climate, click search, and next thing you know, you're gonna have all the questions that we had in the past that talk about climate. And when you read that, you may be like, oh, look at that. The red screen is what matters to me. So you can click in here, not only see the question, but also see the answers that were posted, which could be posted by us as a support team, but I can also be supported by any of you. Okay, so what I was saying here is that when you come in here, let me refresh this page. So when you come in here, you log in. So I am logged in as me now, Jose Blasco. So when you have questions, just go ahead and give the title, explain what is it that you want. If you want to use screenshots and so on, super recommended. If you want to attach URLs, some link, you've seen something somewhere, you want to do some link or something, just put it in here. And what's going to happen is that instead of you send an email, which by the way, you can certainly continue doing that. Okay, I'm not saying stop sending emails, but I'm just saying that by posting your questions here, you are truly helping the community, because then we'll give you the answer in here. So you get your answer, but now everyone else who is using the platform or everything else that we do, it gets to see the answers in a forum format, and this could help speed up you finding answers in the future or other members of the community. So I would like to suggest that you guys start using that. I think it could be quite useful. While for sure, no need to say, we are here to support you all the way. So not only you can email our support team, support@tradictiv.com, but you can certainly email me directly as well, Jose@tradictiv.com, or email Becky@tradictiv.com, or email Boyan, email Pedro, email Reynaldo@tradictiv.com. So it's very simple. It's our name at tradictiv.com. Count on us. But again, this page is a page that I believe that not everybody is aware of it. And it's basically using tradewithufos.com / the name of your instructor, even though no matter the instructor, you get to the same page, because this is a forum for everybody. Okay. Anyway, so hopefully this is useful. Mark, today I'm reading your question about the bear call. I would not say today is a good day for a bear call. I would say today is a good day for everything, because out of today, you may get a huge correction in the market and go down crazy. Out of what's happening today, especially into tomorrow, the climate may confirm, and then next week is going to be all week up. But also, technically, the S&P in a daily time frame is in a sideways market. So, another way to trade was to find an iron condor, which unfortunately, with a VIX solo, we didn't find one that meet our rules, which are very demanding, by the way. So I would not bet on a specific direction today. That's what I'm suggesting to do, because we are looking for a little bit extra confirmation into today's close. Will confirm the climate for tomorrow, but most importantly, Friday close will confirm the weekly climate, and therefore, a better understanding of what may happen in the following weeks. Okay. Thank you so much, Joanne, for that compliment about the help area. Again, this is still very small in size, but counting on you guys to just push your questions there, because again, that's going to become very useful to everyone. And I know you guys are all about teaming up and community, and that's the way it should be. So super appreciated, and I wanted to share that with you guys. So I will let you go, and I will see you on Sunday. Sunday, same place, same time. We'll have our top session, and we'll be talking about the platform and the functionalities. And if you have questions, send them, please. Okay. And again, ideal place this page, but if you prefer to use an email, of course, delighted to receive it. Okay. Yeah, I think to be honest, I think this forum type, this help area, as it grows, it's gonna be the place, much more than an email. But in any case, guys, you feel free to do whatever works best for you guys. We will never turn off the emails or things like that. Okay, so that doesn't make sense. We just wanna, be as visible as possible, be as transparent as possible, so you guys can just express yourselves, get our responses, but also see how other users of our technology, other traders in the community are expressing themselves and phrasing their questions, but also their problems, challenges, whatever it is, guys, okay? Because that way we can help you better. So feel free to use the tools. Take care, everybody. See you soon, my friends. Keep up the good work, and counting on you on the Sunday if you have the time. Bye-bye.